Hi everyone, I'm Andrea Garretta. I am an XP Italy onboarding specialist and I also specialized real estate agent in the non-residential market, specifically in logistic investment. For this reason, I would share with you some quick information about the non-residential Italy real estate market. The first half of the year was a rather turbulent time for the world. In this situation, some countries that ended up in the midst of domestic political turmoil, such as United Kingdom and Italy. The war in Ukraine, geopolitical turmoil, energy crisis, rising inflation, and tightening the central bank's policies have raised fears of a recession for the global economy. For real estate, it means that the low-rate environment is a thing of the past, and investors and banks are preparing for a no negative interest rate scenario for the coming month. But it will be a story for the next part of the year, while the first half of this year ended with a positive results, both for the economy and for the real estate sector. The Italian economy grows solidly in the first half of the 2022. GDP increased slightly in the first quarter and accelerated in the second part of the first half, up to 4.7% year-on-year, according to the recent Bank of Italy data. Overall, the real estate sector continued its run in the first half of the 2022, with the occupier and investment market performing well. Investment volumes stood at about 6.1 billion euros, more than a double at the same period of the last year, and 70% from 2019. This is the highest first half of the year ever, confirming the high interest in the market. Capital flow for real estate are still robust, but the new higher rates environment will add a cautious in the second half of this year. Please, other slide. The gradual recovery of tourism has supported these results and is fueling confidence in the hotel real estate sector, which recorded nearly 1 billion investment in the first half of the 2022, up 68% from the same period of the last year, and up 5% from the average of the past 6 years, including the record half year of the 2019. Hotel operators, as well as investors, confirm Italy as one of the top targets. In fact, despite the winds of war and the economic crisis, tourism is on the upswing in the 2022, as evidenced by packed train and planes. Along with the tourism, hotel real estate is also growing, which was already in a positive phase before COVID. Other slide, please. The office market recorded the external absorption values both in Milan and Rome, well above pre-pandemic levels. In particular, Milan recorded a 48% increase over the same period of the last year, while in Rome, the figures were about 5% higher than the previous year's volumes. Quality for people and environment combined with efficiency are the main drivers for companies looking for a space. Consumers are gradually returning to a normal life, living with the virus and adapting their behavior to the new headwinds of rising cost of living. Revenue sales improved in April and May, while footfall continued to be below 2019 levels. Other slide, please. The rapid rise in interest rates offset the improvement in fundamentals, and investors continue to be selective about retail, with about 400 million invested in the first half of the year, better than last year. Nevertheless, the current level of return in the shopping center sector present a relative premium over other real estate sector and bonds. Fundraising for opportunistic and value-added strategies could create some opportunities in the coming month. Other slide. On the other side of this change, consumer behavior is a transformation of the logistic and distribution chain. That is driving for the strong growth in the real estate. A new record for investment volume in the first half of the year, with 1.8 billion euros, the highest ever. This followed by the demand for a space within 1.5 million square meters absorbed up to 21% from the same period of the last year. Overall, we are entering in the second half of the 2022 with the solid fundamentals for the real estate sector. Rising interest rates could pose a threat for the real estate market in the future, making it more difficult for investors to access finance. Banks have already raised the cost of debt. Despite this, the growth path of the sector in Italy towards maturity does not stop. Milan is still the most covered market by investors, recording an increase in investment of 75%. In the first half of the year, 22% compared the same period of the last year to 1.8 billion euros, while Rome recorded an investment of 1 billion euros in the first half of the year, a huge increase compared to the 143 million euros in the last year. The target of an ever increased and selected number of global investors is confirmed. Investors, both core or opportunistic, are still active. They accelerated the closing of their ongoing deals before taking a break to think about new strategies to align with the higher rate environment and the needs of the new market. Their approach will be more cautious, underwriting more prudent, and the business plan will be updated with the contingent data. The second half of the year will be different from what we were used to, but the market will continue to move forward. Thanks for your attention.